Hi guys, and welcome to this week's mentorship video. And today we're going to focus on dollar index. We're going to do a short and precise, like a rough summary of what I expect the dollar index to be doing up until the Fed meeting rate decision that is on the 21st or 23rd. I cannot remember. Let me just double check that. So that's on the 21st of September. We're going to have the rate decision for the United States. So we're going to look at how we can trade in the meantime up until that release. And the main contributing factor to this analysis is going to be the inflation news that we are getting tomorrow. The reason for that is right now the Fed is now in recess. What do I mean by that? We are not going to get any comments whatsoever from any Fed official up until the 21st. So it's like a blackout of media for the Fed. So we're not going to get anything or any articles from the Fed. So it's going to be quite a very tough period, I might say, for retail traders, such that we won't really know what's happening in the market, and a lot of manipulation is going to happen. A lot of people are going to get stopped out in their positions. We are going to see moves that are going to pan out that are not really actually what the market is supposed to be doing, because it will all be based on sentiment, not on what we are hearing from the Fed officials. So this recess period is going to be very critical. It's not difficult that much if you know what you're doing. It's actually a very profitable period of trading. Second week, third week of September is always fruitful in terms of pips in the market. So looking ahead to the dollar index, so we've got CPI coming in tomorrow. So I'm only going to be focusing on dollar index in this weekly video, and you by now you should know already how to take that forthwith when you're looking at other major currency pairs or even the other minor pairs. So we've got CPI news coming in tomorrow, 2:30. This is going to be huge. This is going to be big, guys. And right now, the year-on-year inflation is forecasted for a drop of 0.4. Right. Last month it dropped from 9.1 to 8.5. Right now the forecast is a drop to 8.1. Now I'm just going to switch quickly to the charts and then go to the commodities. Right, on the commodities section, we have seen oil drop to $86 a barrel. That's Brent. We've seen a huge drop in the precious liquid, such that we've got a downtrend confirmed in the Brent price action. Right, so this drop happened largely the previous month and the current month. Now that drop in Brent is a main contributing factor to energy prices, right? You'd have seen that energy prices have been decreasing in the past month or month and a half. A good example is fuel. Fuel did drop here in South Africa with almost close to 2 rand or maybe 2 rand plus. Last week it has dropped, and the previous month or month two it also dropped by around 1 rand 70 cents. That in itself signifies that energy is coming down, and if energy is coming down, it's going to have a huge impact on your food basket, which is our year-on-year inflation. So with the 8.1% being the forecast, we are anticipating a drop in inflation, but it can go either way, guys. So you must be ready, right? It might not even drop to 8.1. Maybe it might come back the same as 8.5, or it might be just 8.6. I don't know. We just have to wait for the number. That, but now that number is going to give us a clear directional bias on where dollar index is likely going to trade to up until we reach the Fed decision on 21st. So looking at dollar index, you can clearly see September has really tried to push to the upside, but the second week of September, just gonna go, you see, September did try to push up, but by the end of the first week, we closed way down, and right now we are still looking at lower prices on dollar index from as high as 110.78, right? Now, if inflation does drop, then we're likely to see further moves to the downside on the dollar index. The reason being that the Fed, they're going to stick to their 75 basis point rate increase. And with that in mind, uh, they'll be going still aggressive on inflation, pushing down inflation number to the downside, because the data coming out of the United States is showing that yes, inflation is slowing down, but have we reached a turning point? That's not yet confirmed. So we are likely to see again the Fed going aggressive on their rate hikes by another 75 basis points, thereby meaning we should see a weaker dollar up until the rate decision, right? So meaning that rallies in dollar index on lower time frames, rallies that trade into premium should offer you shorting opportunities. We're going to see that when we go to the lower time frames. So that's like the scope of it all. Looking for a drop in inflation and an aggressive uh, rate decision, further rate hike of 75 basis points. So looking at this monthly chart here, you can clearly see, I'm just going to mark out the institutional order flow quickly on the monthly chart. Now remember, we're going to use this for the upcoming, say, probably the last quarter. All right, this is what we're going to be using in terms of our price action. Now remember, we will have to be reacting to what's happening in the market, right? There can be something positive for the dollar, which will then eventually push it to the upside. But for now, I think we now need to lean towards probably maybe a top in dollar index. Any further moves to the upside, guys, will be signified by probably maybe by say a lesser aggressive FOMC rate decision, or if CPI comes in higher than expected tomorrow, or maybe just below 8.5, say 8.4, that would be a bit bullish on dollar index, right? So if that does happen, remember, you need to react in that sense. Now, this down close candle here, the month of May, that was the last down close candle before June, July, August push to the upside. That candle traded above these two relatively equal highs. I'm talking of this high and this high. So what I'm going to do here, I'm just going to put this must be the highest point. So we've got 103.94. What is the high on this candle here? 103.94. The month of May broke above, right? But the bulls couldn't sustain it. Then it dropped, reaccumulation, right? Reaccumulation in fair value on lower time frames. Then we saw 3 consecutive months of a push to the upside. So I'll be anticipating price action to drop to this level here, targeting 103.94 in the next quarter or leading up into the new year. You see how I look at price action, guys. It doesn't have to be difficult. Already I'm coming up with a scope. I'm coming up with a price action that I can understand, right? So we've got these two relatively equal highs, price traded above, then price rally. Then market structure was bullish, right? It's still bullish. We've got this high, but we've got previous month high, right? That's our old high coming in at 109,435, right? 109,435, that's our old high, which price traded through. Right now we are trading below. We cannot really say this is a run of stops on the monthly chart because price can still move to the upside. But once September is closed, once we get the close on September's candle, then we've got price action that can facilitate us validating this as a run of stops or a breakout to the upside, right? So we also need to take off 109,434, right? Now, what else do I have to look at in terms of this structure here on the monthly chart? Now, this is my range of opportunities, guys. See, inside this price action, that's our range of opportunities. What I would advise is you must also have your own copy of my analysis. Then you perfect it in your own way. Remember, what I'm teaching you guys is so that you eventually be in a position to do this by yourself. Not always to follow what I'm doing because this is my own personal thoughts. But from my personal thoughts, we can build up a proper analysis together. So this is my range of opportunities, the range between 103.94 and 109.43. Yes, we do have imbalances down here, but that's for like probably the second or third quarter of next year down here. That will be targets now for shorting opportunities, right? So expecting a weaker dollar heading into this week here and up until the 21st, I'll be anticipating a weaker dollar, right? Now, this is my range of opportunities. Don't forget, and this is our monthly bullish order block. Well, now we go to the weekly chart. What do you see? We've got imbalance right here. Right, that's the first. Uh, that's the first premium discount area that I'm taking a note of, which will be your target. Remember, we are anticipating lower prices, meaning discount areas will be our targets. We'll be expecting price to move and fill up this imbalance here, and only then we should expect maybe a bit of uh, buyers coming back in to the picture. So validating current month high as a run-off stop, we need price to just hold on a sec. I always want this to be perfect. Okay, I might get rid of this now. We all know that between the two lines, that's my range of opportunities. So for us to confirm this here as a run-off stop, what do we need to see in terms of price action? Most probably a close below this candle's low, right? You can see here we didn't close below. Here we are. This is the current week's candle. If this candle does break through and drop into this price action here, which is highly possible, guys, highly likely that we should see this imbalance being filled, right, leading into FOMC rate decision. We could see 2 weeks of drop. So that's this current week and the following week dropping to the downside. And ultimately, if we do get that 75 basis point increase, and if inflation drops tomorrow, ultimately we should reach for 103.94. You see, 103.94. Only then we might see dollar trying to push to the upside. But once those two conditions are met, there will be no need for you to be hunting for longs on dollar. That would be a clear confirmation of price moving to the downside. You can see this drop here. This is the drop that happened, I think, the last CPI release. We had 4 consecutive weeks, 4 weeks of down moves, though we've got this up candle. Then price rallied to the upside. So now looking at this other price action here, what other discount areas do I need to take note of? Now this imbalance here on the weekly chart is inside the monthly bullish order block. That's that down candle for June. This will be targets for your shorting opportunities. You'll be targeting these levels of this point of interest to be filled. I think right now the only high probability bullish order block we've got is this one here. Yes, this will be ideal for longs on positive news for the dollar because it's accompanied by a fair value gap. This one here, it's not accompanied by a fair value gap. You only go long there on positive news for the dollar. Now, in terms of premium, what premium areas do we have? This last up close candle before the down move, right? We had imbalance here. It was filled. Market opened with a gap. It filled up that. This last up close candle, I wouldn't really like to classify it as a bullish order block, bearish order block, sorry, because the price action here is still undecisive, right? Probably when we go to a lower time frame, which is maybe a daily time frame, we should be in a position to see a premium area of interest. Now, on the daily chart, we also have this high. Talking about this one here, the last up close candle, the high coming in at 109.999. So that's basically 110. This is basically 110. The 110 price point. It will be of interest once we are on lower time frames. It's mainly because of the premium areas. That's our old high price run traded above, then moved lower. So what else on the weekly chart do I have to be aware of? Of course, the 103 being our target. So now I'm going to go on to the daily. Now on the daily chart, remember the 110 price point. Remember the 109 previous month high coming in right here. Previous month high. See how price behaved when it was up above previous month high. Now, if you remember correctly, we had imbalance there on the 110, 111 price point, 108. There was imbalance, and that imbalance has now been filled. Now, you need to ask yourself, what could stop dollar filling up all this imbalance, right? What is it that could stop dollar filling up this imbalance here? See? That's how you have to be in a position to look at this market, right? A move to 106.68 is on the cards, guys. Uh, don't dispute that one. Don't ever think otherwise. A move to 106.69 is on the cards on dollar index. We only need CPI to drop. A drop in CPI. Right now, 75 basis points is almost priced in for the Fed. 88% is priced in a 75 basis point rate increase from the Fed officials. Now, anything can happen in between, but we are not going to know now, you see, because the Fed is in recess. So now on the daily chart, you can clearly see we've got imbalance right here. I don't need to mark it. Otherwise, the chart is going to become too noisy. Right? Put imbalance here, expecting price to fill up that imbalance. Now, 109.434 becomes crucial now. 109.434 a retracement to 109, a move lower. See? Because obvious, price is not just going to drop. Yes, it can, but in terms of uh, IPDA, there's imbalance here. That price has to fill up. See this daily imbalance here. That becomes our premium array. Let me just zoom out a bit so that I can mark it out all the way to the dotted line. Right, the dotted line is just a focus that I put in the future, such that when price eventually gets to the end of the month here of October, I'll start another top-down analysis, right? So we've got that imbalance on the daily chart, right? That's a level of redistribution. Market will look to trade into that area, right? Before another push to the downside. Let me grab this. Let's do this. Just gonna put a different color shade so that it's more. So you should know that the two red lines, that's my imbalance on the daily chart. The two red lines, that's my imbalance. That's my imbalance on the daily chart, which becomes a fair value gap for redistribution and further moves to the downside. See, targeting 106.69. So that's my premium areas on the daily chart. As of tomorrow, the H4 chart tomorrow, I'm expecting price to come. By the time we most probably wake up, we would have had Asian session move higher. Right now, the dollar is moving to the upside after the auctioning of those 10-year treasury notes. Dollar is finding a bit of move to the upside, but you can already see we've got imbalance here, which I expect dollar to fill up, right? Once that imbalance is filled, heading into London session, New York session tomorrow, I'll be expecting price to find a bit of a resistance inside this premium area here. See, still have imbalance there, a gap that has been opened when market opened today. Market jumped, then dropped. So expecting this level here to be sensitive in terms of price to move lower. See? If it's a case that this level does not provide sensitivity to resistance, this bearish order block here on the H4, which is this guy here, this bearish order block, because it's accompanied by a fair value gap, that makes it a high probability bearish order block. Same applies with this one here. See guys what I'm talking about. Of course, price did not really touch the order block, but you can see that this H4 bearish order block is accompanied by this fair value gap. Look how price reacted inside that level. Look at this price action. We had a push to the upside. In that moment, everyone would have been buying here, right? When everyone is looking to buy, look for reasons for you to be a seller. It happened again today on Euro USD. Everyone is buying. Look for reasons to be a seller. Look for reasons to be a seller. So yeah, that's pretty much what I'm anticipating dollar to do, guys. I'm looking for lower prices in dollar index. If I switch quickly to the COT report, right? On the COT report, you can clearly see there's nothing, no change whatsoever in the commercials holdings in terms of dollar index. Slight increase of longs, 90 positions only, and slight increase for shorts also like 10 positions. That's nothing. That's equal. So that has been going on for the past, say, a week or two on the long side, and we've seen like a huge increase, a huge. Sorry about that, guys. Sorry about that. It's been a long day. We've seen a huge, smaller increase in the short position, but that was after a huge increase from 39,000 to a huge drop from 42,000 to 39,000, right? That was 3 weeks ago, right? 3 weeks ago, and then we started having shorts getting increased at a time when dollar is trading at extreme highs. So you can go to the hourly chart if you want to be specific in terms of your entries. So expecting dollar to fill up this imbalance. What do I do in the meantime? Right? What I've just explained gives me a clear trading plan on what I'm looking at. So I'm not gonna trade the dollar trading to the upside because I'm expecting shorts, right? But that does not mean I should go long to anticipate. No, I don't trade on anticipation. I trade on facts based on fundamentals, right? So expecting dollar to trade into 108.87 before we start looking for shorting opportunities. Okay? I'm not gonna trade the dollar to fill up this imbalance. I don't know if it's gonna go up there, but what I can do is wait for price to show me exactly where it wants to go. And right now, dollar is showing us that it really wants to go to the downside. We had huge impulsive moves to the downside for the past week or so. Today, we already had a very huge impulsive move. Now, this low here and this high, there's a huge imbalance there. Nothing will stop dollar filling up that imbalance, right? Price will likely find resistance support once we reach 106.69. So that's what I wanted to share with you in regards to dollar index. And of course, the opposite applies when you're looking at Euro USD. You see this big bullish candle here, this H4 candle from I think Asian close this morning. See this rally. The time that price action is moving higher like that, look for reasons to go short. Where was price rallying to fill up this imbalance? If you go to the daily chart, you can see this imbalance here. That's where price has now started to find resistance. And that would have yielded you quite a good number of pips, like 70 or odd pips. But since it's a Monday, I do not trade on a Monday, guys. I always wait for Monday's price action to pan out. Then coming to pound USD, you can see here 116 was our point of interest last week for shorting opportunities, which we got right here, and we traded almost to our target, $14. But once $16 broke through and closed above, we had a retracement and then a shoot to the upside. So expecting $17.20 or $17.60 to be sensitive in terms of shorting opportunity. Ideally, you need to go short on pound USD on this bearish order block here because it's a high probability bearish order block. It's accompanied by a fair value gap. So yeah, that's pretty much for this week, guys, and I will try my best to keep you posted on any new developments going on in the market. But yeah, we are focusing on the CPI for tomorrow. So yeah, that's pretty much for today, guys. I wish you guys good luck and happy trading. Thank you.